Hello, my name is Craig Swiston, Portfolio Manager at Lexicon Financial Group here at Raymond James Investment Counsel. Thank you for tuning into this webinar. Over the next 10 minutes or so, we're going to take a look at an important topic, which is to help you understand how donation tax credits work and how you can use them to maximize your impact on the causes you care about most. Briefly, here's our agenda for today. We're going to go through a little bit of a knowledge check. We're going to walk through a case study on the use of donation tax credits, and then we'll talk about some next steps that you can apply to your own personal giving strategy. But let's jump right into a knowledge check with a little bit of a quiz. First question, in recent years, what percentage of Canadian tax filers have actually claimed charitable donation tax credits? And the answer may surprise you based on the statistics pulled from Canada Revenue Agency. Between 20 and 22% of Canadian tax filers claimed charitable donation tax credits. Now, this does not mean that only 20 to 22% of Canadians actually made charitable donations. This number is the number of people that have actually claimed the donation tax credits on their tax return. So, very different number. Let's look at another one. In which Canadian province would you find the most generous donation tax credit system? And again, with 10 provinces and 3 territories to choose from, may come as a bit of a surprise that province is actually the province of Quebec. And this is important because each province or territory has its own rates for calculating donation tax credit. The federal rate is the same for all Canadians, but the rest of your donation tax credit is going to be based on where you actually live. So be sure to check that so you're using up-to-date and correct information. The third question, when was this system introduced? When was donation tax credit system introduced as a goal to simplify the tax treatment of donations and build a more equitable system? And I don't expect most people will know this, but it's been around for a while. We've been working under the same donation tax credit system since about 1988. So just a little bit of a primer there to get you started in terms of thinking about donation tax credits. We're going to introduce Amy. Meet Amy. Hi, Amy. Amy is a case study that we use for a number of these webinars. So if you watch more than one of these webinars, you'll get to see Amy in a little bit of detail. But if this is your first time meeting Amy, here's a little bit about her. She's a public relations executive from Nelson, British Columbia. She's decided to make a one-time charitable donation of $5,000. She earns approximately $150,000 a year from all sources. She's done a good job saving. She has a registered retirement savings plan, a tax-free savings account, as well as some savings in non-registered taxable investment account. She is going to facilitate this donation through a gift of $5,000 in cash from her bank account, and she's already checked with the charity she wants to support, and her donation will certainly qualify her for a charitable donation tax receipt. So how does this receipt generate tax savings for Amy? Well, let's take a look at how the system works. And again, as I mentioned earlier, donation tax credits are broken down into 2 portions. There's a federal portion and a provincial or territorial portion. And again, it's based on where you live. But if you're living in Canada, the federal donation tax credit will apply. You'll see it on the screen here. Donation tax credits have 2 tiers. The credit for the first $200 in donations is 15%, and the remainder of an eligible donation receives a 29% tax credit. Now, it is true if your income exceeds $200,000 a year, you may be able to qualify for an even higher tax credit instead of the 29%. But Amy's only making $150,000 a year, so we'll keep this case at a more basic or simple level. Here is the table that shows all of the donation tax credits, both federally and broken down by province and territory. It's a lot of numbers, but what we want to do is isolate the ones that we're interested in looking at. And in Amy's case, that's going to be the federal numbers as well as the numbers of the province of her residence, which is British Columbia. And you can see those numbers highlighted here on the screen. Now, the next step is to actually do some math. I know a lot of people don't like math, so we're going to do it for you. So let's calculate the credits. And remember, because Amy lives in BC, the following donation tax credits will apply. There's the federal portion. We make that calculation. We take the first $200. We multiply that by the 15% tax credit. And Amy's will get a donation tax credit for $30 for that portion of her donation. Now, the remainder of her donation, which is $4,800, $5,000 less the $200, that qualifies for a 29% tax credit, or $1,392. So the federal donation tax credits in this case would be $1,422. Now, she lives in British Columbia. We use the same tiers but different percentages, and you can see how that math breaks down. The British Columbia donation tax credit in this case is $816.52, which leaves Amy with a total charitable donation tax credit of $2,238.52. If you're doing this calculation for another province, you would double check the provincial donation tax credit rates, plug these into the same numbers, and get your calculation that way. So how does Amy actually go about getting a benefit from the donation tax receipt and the subsequent donation tax credits that she's received? Well, she can use that donation tax credit to reduce the amount of income tax she pays in the year that she claims the credit. This is important because it can reduce the after-tax cost of her gift. Let's take this case as an example. Her $5,000 donation resulted in a $2,238 tax credit, which means that her actual after-tax cost of giving is going to be the $5,000 less the $2,238 she gets back from the government at tax time, for a total of $2,762. So the cost out of pocket to her is $2,762, yet the charity receives a benefit of $5,000. But let's ask the question a different way. What if Amy wanted to actually give an after-tax number of $5,000? How much could she afford to give in support of the charity that she's chosen? The answer might surprise you because it's a lot more. Using the same charts and the same schedules, if we run the calculations, if Amy makes a donation of over $9,100, she will receive a donation tax credit of approximately $4,100. Now you can see the exact numbers on the screen. And when you do that math, you see that the after-tax cost for gift is the $5,000 as she intended, but the charity is receiving a significant amount more. That $9,130 donation to charity is only costing Amy after-tax $5,000. So using these receipts are very important. We've looked at two ways. One, how does Amy reduce her overall after-tax cost of giving? Or two, how does she use the donation tax receipts and the credits to actually amplify and increase the amount that she can give to a cause that she cares deeply about? Both are acceptable. This decision is completely up to Amy, but by using those receipts, it gives her options. She can reduce the cost of giving, or she can give even more. But none of this is possible if she doesn't first receive a charitable donation tax receipt, and second, use it when she's filing her taxes. So here's a couple of next steps. Make sure the cause you're donating to is able to issue tax receipts for charitable donations. Most organizations that are registered charities in Canada are what's known as a qualified donee. If you have questions, you can always ask them directly or check their status on the Canada Revenue Agency website. For many organizations, you may not receive a charitable donation receipt for small donations often under, say, $20. It's also important to work with your other professional advisors, especially your accountants, because donation tax receipts can actually be used in the year you receive them, or they can be carried forward for up to 5 years. Claiming the donation credits in future years may have additional tax advantages if you intend or are planning on earning more money in those future years. Again, work with a professional accountant to make sure that you're making the right decision for you. Donations can also be shared with a spouse, and generally, the higher income earner is the one that wants to use these donations because it may result in even more tax savings for you at tax time. Always work with professionals, especially in cases where large donations. We do have a system in Canada where there is an alternative minimum tax that applies. This usually only comes into effect if you're making very large donations. So if that is the case, please consult with professionals before making a decision. Understanding how all of these donation tax credits work, yeah, it can reduce your income tax bill, allow you to give more to the causes you care about, or maybe even both. One of the other next steps that's important is actually choosing a charity and getting started. You may already have a charitable cause or causes that you support, and that's fantastic. But if you're asking yourself, who should I support? Ask yourselves the following question. What causes are you most passionate about? What issues are you most concerned about? Do you think globally, nationally, locally? What are your values and how do they align with the mission and vision of the organizations that you're looking at? Your why you choose to support something is, as Simon Sinek says, is the compelling higher purpose that inspires you and acts as the source of everything you do. So make sure that you hone in on what your why is, because until you figure out your why, it's hard for professional advisors like us to help you with the how. How are you going to get this done? How are you going to maximize the impact you have on the causes you care deeply about? But consider this. We offer a complimentary workshop for individuals, small groups. We've presented at conferences called What's Past is Prologue, and it's a workshop that creates a framework for you to evaluate the causes that have had an impact on your life. Our contention is that the past isn't something you leave behind, but it's always with you, always beside you, and always shaping the choices you make and the causes you choose to champion and support. If you'd like some information about that, please reach out to us directly. Thank you for your time and attention. If you'd like more information, you can always find it at our website, lexiconfinancialgroup.com. There you'll find an archive of all of these webinars, as well as additional articles that we write. You'll also find a copy of our weekly market update, where each week we take maybe an interesting or a somewhat quirky look at what's going on in the financial markets and how that has an impact on portfolio construction and investor behavior. As always, work with professionals to make sure that you're maximizing the impact you can have on the causes that you care most about. Obviously, portfolio managers like us who have a deep understanding of these issues can be helpful, but don't forget about the accountants and lawyers that may be in a position to help you structure your affairs most effectively. And thank you once again for joining. I hope this brief webinar has given you a better understanding of how donation tax credits work in the Canadian system and why it's important that when you do make donations that you get those donation receipts and actually use them in a way to maximize the impact you can have on your community. Once again, thank you for your time. We are always available to help. If you'd like a complimentary review of your philanthropic situation, all you need to do is reach out.